We've now entered a very unique phase of the crypto market, and I'm gonna tell you exactly why, so pay attention. Remember all the hype about the Bitcoin halving event last year in April? Everyone is patiently waiting for the day to come, but why? Well, that's because in past cycles, many believe that the Bitcoin halving actually set off a timer for the bull run. Within 6 months of the halving, we saw Bitcoin's price begin its strongest climb of the cycle towards the top. This was true for both the 2017 and 2021 bull cycles. And in both cases, the bullish momentum lasted for about a year after this point, leading to the top of the cycle. The altcoin market was also pulled along for the ride. And you can see this with the blue total 3 line. But in terms of timing, it took about a year and a half from the halving date to reach the peak. So what happened this time around? Well, in October of 2024, 6 months after the April halving event, Bitcoin took off to a new record high over 100K. Altcoins also began taking off during this time, and this would have confirmed the halving pattern. But the momentum quickly died. Bitcoin fell back down to 80K and altcoins fell even lower. Now, Bitcoin's price did make a recovery and the chart is now looking to find its next leg up, while altcoins are still lagging behind. And the big question is, what happened? Why does this cycle look different from the past? Well, I'm sure you can come up with several different reasons to explain why things are so different this time. A new president that supports crypto, new regulations for digital assets, crypto spot ETFs, and the list goes on. But let me bring your attention back to this chart. Something about Bitcoin this cycle looks very similar to what happened in the 2021 bull cycle. Do you see it? There was this double peak in the last cycle. After the first peak, Bitcoin dramatically fell over 50% on the chart. The majority of this drop happened within a day, and headlines were calling this a flash crash. This total 3 graph also shows us that the altcoin market suffered too. This was enough to stir up panic, and people actually thought they already saw the cycle top. But things flipped. In the coming months, Bitcoin reached a second price peak and altcoins bounced back even harder. Just based on this chart, you can see how there was still a bit of momentum for the altcoin market even after Bitcoin entered a strong downtrend. So let's go back to where we are now. Bitcoin recovered from its major pullback this year. Altcoins are still lagging behind. And here we are wondering if Bitcoin will reach another peak and push the altcoin market to the next level. Well, there are several other indicators that suggest an altcoin season is in order. We're still waiting for Bitcoin dominance to flip, as this lined up with the most aggressive climb for the altcoin market in past cycles. And one of the biggest driving factors for the last bull cycle was interest rate cuts. Lower rates went hand in hand with greater liquidity, and this fueled the stock and crypto markets in 2021. As of now, global liquidity is on the rise. And while rate cuts remain unchanged after the last FOMC meeting, everyone's expecting rate cuts to begin very soon. Maybe even as early as this fall. This is in line with Morgan Stanley's prediction for 7 rate cuts by the end of 2026. And if this is how things play out, we could see a bull cycle and altcoin season extend beyond 2025. Now, if you've been following my channel, you've probably heard me describe the crypto space as the Wild West, and that still holds true in many ways. The market is overflowing with projects, and as more users and builders enter the space, that number only is going to grow. But with tighter regulations, increasing scrutiny, and more selective capital, the days of hype-driven success are fading. We're entering a phase where maturity, utility, and real-world impact will separate the noise from the value. Most projects won't survive this shift, but the ones that do will be those solving real problems with real tech, strong infrastructure, and meaningful partnerships. And if there's one project that continues to prove that it has what it takes to thrive in this new era of crypto, it's Hedera. Now, I've talked about Hedera and the hbar coin before on this channel, but this is a project that's constantly growing. And if you thought Hedera already had its moment and the hype is over, you need to keep watching, because I'll give you all the important aspects you should understand about this project. But first, a quick heads up for all the crypto traders out there. People always ask what exchange I use, but honestly, I don't just stick to one. Hacks and outages happen more often than you think, even on big platforms like Coinbase. That's why I use over 10 different exchanges, and one of my main ones is WEEX. They've got some of the lowest fees out there, and signing up only takes an email. You can check it out and learn more by following the link in the description below. And if you want early alpha and real-time market insights, join the FireHustle VIP Discord. It's also linked down below. Just remember, none of what I share is financial advice. It's all for educational purposes only. Now hit those like and subscribe buttons, turn on post notifications, and let's get into it. So about 8 months ago, the crypto market experienced a massive climb. This brought Bitcoin to a new level above 100K for the first time, and at the same time, the altcoin market also surged. Some altcoins went through a massive push, and one that surprised everyone is hbar. But why am I calling this a surprise? Well, you can see from the price chart that the hbar coin already went through an enormous climb in the last cycle. And since the 2022 crash, hbar remained in a much more lower trading range, bouncing between 4 and 9 cents. This downtrend through 2024 caused many to question whether or not hbar was just a dead coin. It got labeled a dinosaur coin because of how long it's been around on the market. Then look at what happened. The market push near the end of 2024 resulted in hbar going from about 4 cents to almost 40 cents, a level of price action that was last seen during the 2021 bull cycle. This put a lot of eyes and attention on the Hedera project during that time. But just like the rest of the altcoin market, hbar also started trending downwards again. The hype from the big price jump also wore off. And the same question comes back to mind. Is there more we can expect from hbar and Hedera? Or was that 10x move actually a fluke for this dinosaur coin? Well, considering that hbar is already a top 30 cryptocurrency with a market cap of over $6 billion, and the fact that it's been around for over 5 years, points towards less upside potential, especially when comparing this to newer, smaller projects and tokens that haven't seen a bull run yet. But I would argue that's actually not the case. Hedera is in a much stronger position now than it was in the last cycle, and the part that most people miss is that they're not slowing down at all. So let's start with their involvement in tokenizing real-world assets. So RWA tokenization became a major narrative this cycle, but I don't think this should just be written off as simply a narrative. There's a growing interest in moving assets from the real world to a decentralized network. This increases accessibility for investors, enables transparency for all parties involved, and helps validate true ownership. Trading also becomes quick, cheap, and easy to track. For anyone that still thinks this is just a hype narrative that had its time to shine already, just look up RWA tokenization. This has been one of the fastest growing areas in crypto over the last few years, and there's still ongoing growth and development in the sector. More and more companies are showing interest in the tokenization market. And just look at the growth we're still seeing now on this chart from rwa.xyz. The total value of assets on chain reached about $25 billion now. So we're seeing a major shift to push assets on chain. And we already know that giant names like BlackRock and Franklin Templeton have been behind this concept for a while now. So what does Hedera have to do with RWA tokenization? Well, a lot. Actually, more than people realize. Hedera isn't just participating in the RWA movement, it's positioning itself at the center of it. So let's start with some recent updates. A few months ago, the hbar Foundation partnered up with StegX and ZonicX to help tokenize over $100 million in real estate. These tokenized assets were issued using something called the ERC 7518 token standard. This integrates KYC and anti-money laundering compliance into the token, which makes these assets perfect for institutional use. One name that we can't forget to mention here is Archax, which is a UK-based digital asset exchange. Archax has been making use of Hedera's network to tokenize several different funds over the years. I've talked about Aberdeen on here before, which is an asset managing company that tokenized part of its £15 billion market money fund on Hedera with the help of Archax. But this partnership didn't just stop there. Archax also helped tokenize a US Treasury fund from BlackRock on the Hedera network. And while this wasn't a direct connection between BlackRock and Hedera, it's still a major deal. Now, Archax is based in the UK, but earlier this year they acquired a US regulated broker deal. This move expands the company's reach into the US market, which also benefits their partner networks, including Hedera. Not too long ago, Hedera also partnered up with Verra, the world's largest carbon credit registry. The goal of this partnership is to develop tools to improve monitoring systems in the carbon markets. Verra was also the first organization to use Hedera Guardian, a platform specifically built to track environmental processes on-chain. Shortly after this partnership, Blockchain for Energy joined the Hedera Council, and they too are making use of Hedera's tech to run their emissions management platform. So RWA tokenization isn't just about market funds and properties. It involves any asset that could benefit from being placed on-chain. A big part of Hedera's push into the tokenization space is their underlying tech. Last year, the team launched the Hedera Asset Tokenization Studio, which makes it easy to issue any tokens on the network. And what makes this an effective system in the real world is the built-in support for SEC regulations, which means tokens being issued without worrying about staying compliant, and that's a big plus for organizations that are considering tokenization. To push things even further, Hedera also recently incorporated Chainlink's cross-chain interoperability protocol onto the mainnet. And if you don't realize why this matters, here's a good way to put it. Imagine all the people and companies looking to tokenize their asset. There are tons of network options out there, and naturally, not everyone will choose the same one. But here's the issue. Most networks aren't built to communicate with each other, so assets often get stuck to their original chain. That's where Chainlink's CCIP comes in, and it acts as a bridge between networks, allowing assets and data to move freely across chains. By integrating CCIP, Hedera opens the door to users and liquidity from other ecosystems to flow directly into its own. This is great for tokenized assets, but it's also a benefit for all of DeFi as well. Now, you might be asking, isn't tokenization related to DeFi? Well, the answer is yes. They're both connected to each other. But DeFi is like a large umbrella, and tokenization is just one part that fits under the umbrella. It's the process of bringing the assets on chain. From there, DeFi opens up digital assets to all kinds of services, like payments, lending, and borrowing, earning opportunities, decentralized exchanges, the derivative markets. It's an entire financial landscape that operates on the chain. If you look at the data, this is an area of crypto that was once booming in the last cycle. And we're starting to see signs of it coming back to life with the total value locked in DeFi protocols on the rise. But this time, it's expected to go much further. Don't believe me? Well, many are predicting the DeFi market to be worth trillions within the next decade. We know crypto as a whole is rapidly evolving right in front of our eyes, to a point where big names like JP Morgan believe DeFi and traditional finance could fully merge within the next few years. So everything we know about finance in the real world would be moved on-chain. It's a bold statement, but something that can't be ignored. If we look at the Hedera network alone, there was a big surge in funds coming into the ecosystem. And this lines up with Hedera's big price jump near the end of 2024. But the TVL on Hedera retraced back to under $100 million. And if you compare this to the grand total of value on DeFi right now, which is just over $100 billion, Hedera accounts for just a tiny portion. So can this network actually become a leader in DeFi considering where it is today? Well, one thing to mention here is that Ethereum is leading the DeFi space, and it's holding more than half of the TVL, which makes sense. Ethereum has been around for much longer, and they've been providing the majority of DeFi tools and services that we see today. Hedera is relatively new to the DeFi space, and they've just recently started rolling out DeFi products. For example, H-Suite is a platform that was launched on Hedera to compete with existing smart contract technology. They introduced smart nodes that are more scalable, more customizable, and more efficient than traditional smart contracts. Of course, every new idea in the crypto space needs time to grow, and knowing the competition includes a giant like Ethereum, it won't be an easy feat. But let me remind you, the big DeFi boom that we saw last cycle also lined up with the crypto market booming overall. So if we believe that the market will push to new heights soon, this would be fuel for the DeFi space as well. And that's an opportunity for Hedera to expand its reach. We already know this is a project team that's getting their name out there in many ways, like through Karate Combat, which gained a lot of attention over the last few years. And they're actually a founding premier member of the Linux Foundation Decentralized Trust, a growing ecosystem for decentralized tech. The team even donated their entire source code to this foundation, where it's now known as the Hero Project. But what's the point of doing this? Well, this is a way to show Hedera's belief in true decentralization governance. And this opens up the Hedera ecosystem to the global network of Web2 development and enterprises already taking part in Linux Foundation projects. So while hbar's price action makes it seem like the project already had its time to shine, it's important to see what's actually going on under the hood. Hedera is a project that's been busy growing its partnership circle and developing tech to fill the gaps in Web3. It's getting positioned for the next leg of this cycle, especially considering that RWA tokenization and DeFi have a lot of potential going forward. And if the altcoin bull run does go into 2026 or even beyond, this creates more time for projects like Hedera to prepare. Obviously, there's way more to talk about when it comes to Hedera and what the team is working on, and many controversies about the project that create a bearish case, which is why I keep coming back to this project, and I'll definitely be providing updates in the near future, so stay tuned. What are your thoughts on Hedera and hbar? Do you think they're positioned to take full advantage of an upcoming bull run, or is this a dinosaur project that's not worth looking at? Leave a comment below. I'd love to hear what you guys have to say. And just a quick reminder, this video is not financial advice. Always do your own research before making any investment decisions. If you're looking for early alpha and real-time market insights, then come and join the FireHustle Discord using the link down below. And if you want more videos like this, don't forget to like and subscribe. Hope you guys enjoyed the video, and I'll see you in the next one.